Occidental Petroleum Corporation is up almost 7% to $69 a share. Very, very nice. And the reason for that is due to Warren Buffett's Berkshire Hathaway have won approval to buy up to half of Occidental. What we're going to be doing is going through that news right now, looking at Occidental's income statement, balance sheets and cash flows, taking this to my stock summary sheet, going into my discounted free cash flow model and my Buffett-Graham intrinsic value model to see if this stock is a buy or a sell. Is Warren Buffett making the right move? Do we agree with him? As I said before, shares in the US oil and gas producer jump up after the energy regulator authorizes its increased stake. Berkshire Hathaway has won approval of the US energy regulator on Friday to buy up to 50% of Occidental Petroleum, giving Warren Buffett's company the option to vastly increase its stake in one of the US oil industry's most storied producers. The Federal Energy Reserve Commission said Berkshire's proposal was to increase its stake to $60 billion within the oil company, and it was consistent with the public interest and has requested authorization up to 50%. Because of this, the shares have jumped to 9.9%. Obviously, we saw before it was down to 69 rather than 71, but this is another part of the piece. As you can see, Buffett's support was instrumental in Occidental's takeover of, I'm not going to pronounce that, Anadarko Petroleum in 2019 for $55 billion. And if we can see how the stock price has gone over the last few years, when they won the battle of that company I just couldn't say, oil price crash, dropped down to, around about $10 a share and has rebounded very, very strongly. So let's get straight into it. We'll look at the finances and talk about the stock summary sheet. So firstly, Occidental Petroleum, $66 billion market cap, $71 a share, 52-week high of 74, 52-week low of 21. What a time that would have been to get in. Dividend, 0.6%. Quite a low dividend for one of these stocks, but if you want the dividend, buy before the 9th of September. So the first thing we want to see is the PE ratio less than market. Before we can get on that, can you please like and subscribe? Really helps me out, and I want to help you guys out too. So the S&P 500 PE ratio is currently 21.37, and is Occidental higher than that? Yes, it is. It has a very low PE ratio of 7. Next, we want to look at revenue. Revenue is up 20 billion to 33. Now, if we go to Yahoo Finance right now, we can see that this is the revenue for the company: 17.8, 20.3, 17.8, 25.9, and 33.7 in the trailing 12 months. So obviously a massive shoot up with what's been happening in the energy sector right now, but still it is growing and growing very rapidly. Next, what we want to do is look at the profit. Is the profit increasing? Yes, in 2017 it was minus $1 billion and is now 10 billion in the green. And you can see here net income common stockholders. In 2018 it was 4.4, then dropped down, minus 15 billion in the throes of the pandemic. They were profitable once again in the last year, and trailing 12 months 10.1 billion, going in the right direction once again. Now, are they buying back their shares? Are they decreasing? Why do I care about this? Well, if you own one share of Oxy and Warren Buffett owns the other 9, you own 10% of the company. If they buy back their shares, then they would decrease the amount of shares on the open market, say to 5. You would then own 20% because the share pool is smaller. But as you can see here, it has gone from 935 million to 761. So what does that mean? Well, they've obviously, sorry, I read that backwards. 761 million to 935. What does that mean? Well, obviously they've been issuing more shares. Now, if we go to the share price over the last year, if they were issuing more shares at this point, they were issuing shares at $20, $30 a share. It's actually turned out to be a bad move because the share price has gone up almost 200% in that time. You would want to be issuing shares when it's at a high price. Now, yes, they've been able to invest this capital. Obviously, I don't think many people except Warren Buffett was thinking the stock would go up 200%. But they were issuing shares during this point, and the stock price has increased. So a bad move, but they have been able to generate more capital. Next, we want to see is the free cash flow increasing, and the answer is yes. Just shy of 1 billion to 11.5. Now, if we go back to Yahoo Finance again, we have to go to the cash flows. We will see what's happened with the free cash flows. And yes, 2.7, 700, 900, even in the bottom of the pandemic, still positive free cash flow. And it's jumped up 7.6 and 11.4 in the trailing 12 months. So I think discounted free cash flow is going to really like this stock. But before then, let's just have a look. Free cash flow ratio of 5, that is 5.7, very low, 66 billion market cap, 11 billion in free cash flow, and they pay a $500 million dividend there, 484 million, and obviously very safe dividend because they have 11 billion in free cash flow. So let's take it to my discounted free cash flow model. We'll look at this first, then the Buffett-Graham intrinsic value. So what does this do? It calculates the future free cash flows, discounts them today's value, and then gives us a free cash flow. Now, looking at these already, we're looking at the averages firstly, and you can see this is negative free cash flow. So let's have a look. Obviously, this is going to be a low number. Yes, minus $129 a share. Obviously, that is not correct, because the reason for here is revenue looks good, net income margins, because they had negative net income in 2018 and 2019, based on these averages, you can see that it's a negative. So let's go bull case first. Let's say they can continue what they did in the trailing 12 months. Let's put it 30%. In terms of revenue growth rate, it looks like 8% is fine, but analysts are expecting lower revenue in 2023. Let's just quickly go to Yahoo Finance and see there. So we go to this page and we look at the analyst estimates. Yes, 2023 analysts are expecting a decrease in revenue. So let's just take that into account. We're saying 8%. They were increasing at, what, 20% average. So we'll keep it at 8% for now. And then finally, net income, free cash flow and net income, 131%. So based on that one change, this has increasing free cash flow for the stock and puts it at a calculated stock price of $272.18 a share. So that is a pretty bullish case. Now let's just bring these net income margins down. Let's say it's a little bit closer to what it was back in 2021. So we'll say 6%. That would bring it down to $50 a share. So I think that is a bit, obviously a bit on the lower side. 25.9 billion in revenue, yet only 1.5 in net income. And if we go back to Yahoo Finance once again, go back to the income statement, 4 billion was a previous number. So let's put that in our calculations. Let's say that number is around about, what, 15%. That would put it at $136 a share, and that is with the free cash flow being about 7 billion in the oncoming years. Now we're going to look at the Buffett-Graham intrinsic value. What that does is it takes earnings per share and expected growth rate into account. So the expected growth rate, we once again from Yahoo Finance, and we see what analysts are saying, and they're expecting in the next 5 years around about 23.5% growth. And that is a pretty good number there. Earnings per share is quite high, 10.17 earnings per share. And the AAA rating of the 10-year treasury is 4.06. We like to make sure that that is up to date, because you can see it fluctuates every so often. What does this give us as a value? Well, wow, absolutely loves the stock. No wonder Warren Buffett wants to increase his stake in there. Fair value of $610 a share, and a Graham price, which is a buy and hold, at 458. So massive discounts. The reason for this is that very high earnings per share of $10.17. What do analysts say? Do they agree with us? Well, let's just have a look as the final piece of the puzzle here. Analysts say that the high side is going to be about $105 a share, low 59, and an average of 77. So regardless of what we're saying here, all the models are saying it's a buy. And obviously Warren Buffett seems to agree. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and let me know what video you want me to do next. Catch you guys next time.